Hello and welcome to our first quarter board meeting. I'd like to take a moment here at the beginning to set some gratitude for everyone here. We've experienced a dynamic 2-year period at Ball that was highlighted by geopolitical unrest, record inflationary growth, and a major brand disruption with our top customer. Yet through the resilience of you and your teams, we controlled what we could control. Our strong results and outlook are a direct testament of your leadership you all provide. So well done, team. Now, pivoting to today's agenda, our focus is on our position as a sustainability thought leader and its complement to delivering shareholder returns as outlined in our Drive for 10 initiative. Please take some time to review the meeting minutes if you have not already. For those joining via teleconference, in attendance from the ELT today are CFO, COO, CMO, and CCO. Now that you've all had a moment to review the agenda, please speak now if you're in agreement. Perfect. Let's go ahead and get started. So team, how are we seeing forward-looking profit margin react to our continued leadership in sustainability and sustainability innovation?
So Richard, operational profit margin is up 480 basis points from Q4 2022 to Q4 2023. And we must capitalize on this momentum and continue reinvesting into our organization. Like many others, we have faced challenges with increasing costs of materials, which directly impacted our cost of goods sold and top-line revenue. However, we still need to make decisions to position ourselves to meet our 2030 goals. We have strategically executed plant closures to better manage our cost structure and optimize the productivity of our network. But going forward, social corporate responsibility initiatives should be intertwined with operational activities. We broke ground when we opened our UK Kettering Greenfield plant in February 2023, and we should aim to model all of our future operational facilities with it as a benchmark standard. Improving and retrofitting our long-standing plants with new approaches to energy and water usage, opening new resource-efficient plants, and securing renewable electricity can lock us into our commitment to climate leadership. We have demonstrated real synergies between sustainability and our focus on cost savings while navigating an inflationary environment. And I honestly believe we need to continue investing in high-growth markets like EMEA and South America going forward.
Thank you, Shasta, for sharing. However, I just would like to call out that our financial situation is just improving, so we need to be very cautious. We are not in the position to move full steam ahead yet. I want to be a bridge, not a wall, and find a reasonable solution to achieve what we want to achieve.
I second Pong's sentiment here. Our investments must be strategic while the North American market rebounds. Think better, not bigger in the near term.
Yeah, I definitely agree with that as well. We are a company that's been around for over 100 years, which is incredible. I think in order for us to remain competitive, though, we should prioritize innovation. This would just mean fostering collaboration and idea sharing, using our internal newsletters as an inspiration piece, and also utilizing technology for safety, optimization, like Shazla's point of finding energy-saving opportunities.
Yeah, and from the financial perspective, Kelly, we did a great job last year in terms of the cost saving and cost management, which directly result in a significant improvement in our profitability. Our gross profit margin landed at 19% last year versus 16.8% in 2022. However, I believe we still having an issue about the top line revenue as demand for our core canning business may continue to soften.
Yeah, Pong, I've also been thinking a lot about how we can source some additional revenue. And overall, I think it's going to start with us bringing the Ball brand more into the public eye. We have already built such a strong reputation within our industry, but the reality of the matter is that few end consumers know who we are. And I think it's time for us to get more credit from those consumers for our dedication to sustainability. I think we have a really good opportunity to leverage our new aluminum cup to do this. People are more willing than ever to pay for sustainable solutions, and our cups are a perfect example of one that doesn't require any compromises on quality, all while being 100% recyclable. If anything, the added benefits of drink insulation and strength make this product the ultimate party companion for sustainable hosts. And we're already seeing really great momentum online from consumers. We have over 12,000 reviews and a 4.8-star rating on Amazon. Playing down the value chain in general means bigger markups and padded margins, which I'm sure our CFO loves the sound of.
I love this direction, Alexa. I think we can continue evaluating diversification opportunities throughout the year. But I'd like for us to pivot now to the completed divestiture of Ball Aerospace last month. We really focused our positioning to build a 100% circular packaging economy. So team, how are we leveraging this messaging to propel our long-term strategies and further strengthen our financial outlook?
Yeah, thanks for bringing that up, Richard. First and foremost, I completely echo your excitement about our newfound focus in the packaging space. Now is really the perfect time to communicate our singular brand mission. And it feels like a natural opportunity to invest in some kind of an awareness driving campaign, potentially with our cup as the hero. Pong, I don't want to make any budget claims or decisions without you. So I would love to sit down and talk realistic investment and ROI targets to make sure that we're spending efficiently.
So actually hearing about this campaign is giving me a lot of thoughts about how our teams can collaborate. My team can definitely leverage existing social media platforms. So we have our Instagram, our Facebook, our Twitter, and we're also working to launch a TikTok account for a more Gen Z reach. And we can use that and track the key metrics and respond to the online comments and just really kind of get immersed with our consumers. Internally, I think there's a really good area for us to utilize our newsletters, our town halls, and again, use social media to just keep employees informed. Shifting gears just for a little bit here, I am really excited to just share our partnerships that have shown to drive positive change. Last year, we collaborated with industry leaders such as Volvo and Fleetmaster Express to pilot a program using their electric trucks for transporting our empty aluminum cans, which reduced emissions, and it did actually inspire a lot of other people. So the success in paving the way for a more sustainable aluminum production chain is something I think we should continue doing.
Radha, I'm so glad you brought this program up because costs of this partnership have already paid off. These electric trucks will complete more than 10K trips, saving more than 9,000 gallons of diesel fuel per year.
Wow, I really love your ideas. I believe in the long term, the new initiative would create value to Ball and result in higher brand awareness and equity, which leads to an increase in the net intangible asset on our balance sheet, and also an improvement in our top line revenue, and perhaps an opportunity for us to increase our price.
Mhm.
Mhm.
Completely agree, Pong. And I think right now, let's put a pin in this go-to-market discussion, just in consideration of time. And I want to shift our focus now on the capital. We've long been an organization that prioritizes the people and the planet. What developments and future economic benefits are we anticipating with our continued stance on sustainability and social impact?
Yeah, I would love to jump in here. So I think by streamlining operations such as our plant closures and some of our other cost-saving initiatives, we will still refuse to compromise our commitment to the Ball family, especially when it comes to DE&I. We are committed to our clear communication, our education around just building a safe and equitable workplace. Also making sure that our people really understand how they're contributing to the overall success of Ball will help foster, I believe, just a more united front and drive alignment around the shared goals.
I couldn't agree with you more, Radha. Human capital is one of our most valuable intangible assets. We're looking to be a better, more efficient organization, and this is exactly why we have created and launched graduate and entry-level internship programs all across the regions with focus on engineering and operations to really build a diverse pipeline of critical talent.
It's encouraging to hear, team. I mean, as we all know, people are at the center of what we do here at Ball. And so as we continue to differentiate ourselves through Drive for 10 and 2030 sustainability commitments, in what ways are we capturing notable performance for shareholders?
Yeah, I just would like to recap to the one that 2 weeks ago, our stock price closed at $63.7 per share, which was the first time in more than a year that our stock price was higher than $60 per share. The improvement in our stock price implied that Ball is gaining more confidence from the shareholders. And from the financial perspective, there are two key factors that drive our stock price, which are profitability and growth. Ball had been profitable over the past year, and last year we landed a revenue of $14.2 billion with an earning per share of $2.23. and its operating margin was 10.2%, which ranks better than 70% of 366 companies in the packaging and container industry. So overall, the numbers are indicating strong profitability. But for growth is another factor that affects the stock price. And if the company is growing, the company usually creates value for its shareholder, especially if the growth is profitable. So in summary, in this situation, I would encourage us to first be very focused on the initiative that drive growth and create value to Ball. Second, prioritize the investment to minimize the impact on profitability in 2024. If the things that we are rolling out can create big impacts on the brand and also receive positive response from customer and consumer, I would say that we would see a big change in the stock price and PE ratio within a year.
This is very promising for shareholders based on where we're at just a year ago. I'd like for us all to keep in mind that the shareholder value is central to us spreading our message. And I will end us with 4 initiatives that I'd like for us to further prioritize heading into our investor relations meeting later this year. First being this new efficient format for international plants. Second being our market campaign for aluminum cups and diversifying our portfolio. And then the final 2 being continuing partnerships and then boosting our DE&I initiatives. So with that, I want to thank everyone for their time, and today's meeting will be adjourned.
Thank you.
Thanks so much, everyone.